Hey guys, happy Friday. So it was the best of surveys and it was the worst of surveys. Terrible Charles Dickens reference there, but really it has been a tale of two surveys today. We have the establishment survey come out and say that we had 272,000 new jobs created in the month of May, which is 90,000 above what was expected. In fact, of the 77 economists that put their opinion in the bucket, not one of them had anything close to what came out today. So very unexpected there. But at the same time, we have the household survey, which showed that unemployment ticked up from 3.9% to 4%, and that there were 400,000 less jobs in the month of May. So again, kind of odd that we see a little bit of both of those. The establishment survey is the one that's usually really looked at more closely, and that's the one that I think everybody points to. So it did move the market today, and unfortunately, this whole week, we had seen things building better and better and better for us. Rates were creeping slightly lower and slightly lower throughout this week because of the data coming out showing weakness in employment, showing that there wasn't as many job openings available. In fact, the lowest job openings available in 3 years right now. And so there was a lot of reasons for us to feel optimistic that today's report would kind of put the cap on that and really help push rates lower. And instead, we got a dud. So it pushed us back to where we were on Monday, which isn't terrible. We just reset for the week. Next week is really, really impactful on Wednesday. So we've got the Fed meeting next week. They'll be releasing the minutes on Wednesday. And then, of course, there's a press conference that'll come out as well and on Wednesday afternoon. And then we also have CPI on Wednesday, which is the Fed's favorite inflationary tool. So that's coming out on Wednesday as well. It'll have the opportunity to be a pretty impactful day. If we're looking at rates right now and locking and where you're at in that whole picture, honestly, it's a toss-up. I mean, I would say I feel relatively comfortable in continuing to watch things and monitor things and looking at locking in next week, potentially if we're closing here in the next 2 to 3 weeks or so, after the Fed report and after the CPI report comes out. If we're looking at longer term, well, then I think we've got some time to continue just to watch things go. So not in a rush there. Overall, I feel like there's been somewhat of a turn. Today was really just disappointing in that respect, but I hope we get back in track next week. Let me know if there's any questions or anything I can do to help. Otherwise, I hope you have a great weekend.